Friday, February 20th. Mark that date on your calendar in permanent marker. It isn't just another trading day. It is potentially the single most dangerous 24 hours for your portfolio this entire year. We aren't looking at the Federal Reserve or earnings reports for this one. We are looking at 9 judges in Washington, D.C. The Supreme Court is set to rule on the legality of the Liberation Day tariffs. These aren't small taxes. We are talking about levies ranging from 10% to 50% that have been costing American importers over $16 billion every single month. This decision has the power to either wipe out inflation overnight or cement high prices for the next decade. If you think the market is priced for this, think again. Welcome to Coffee Break Capital. Financial markets move fast, but we move faster. Sit down, take a sip, and let's get you caught up on the numbers that matter today. We are starting with the risks, because they are currently outweighing the rewards. The immediate threat is the Supreme Court ruling we just mentioned. These Liberation Day tariffs, implemented last April, have reshaped the entire cost structure of the U.S. economy. If the court upholds these tariffs, the market has to price in a for longer inflation environment. That means the cost of goods stays high, and the U.S. dollar could spike, hurting international earnings. Worse, the administration has signaled that if they lose, they might try to replace these tariffs with even more complicated legal tools, creating a mess of uncertainty. But the bad news doesn't stop at the Supreme Court. The Federal Reserve is currently a house divided. On Wednesday, we get the minutes from the January Fed meeting. Usually, these are boring. Not this time. The Fed is fracturing. You have members like Governor Miran wanting to cut rates by a massive 100 basis points this year because he sees the economy slowing down. On the other side, you have hawks like Alberto Musalem arguing that cutting rates is unadvisable until inflation is dead and buried. This infighting is happening right before we get the Personal Consumption Expenditures, or PCE price index, on Friday. This is the Fed's favorite inflation number. Analysts expect it to show core inflation ticking up 0.3% month over month. If that number comes in hot, say 0.4% or higher, it hands the victory to the hawks. That would likely push any hope of interest rate cuts all the way to late 2026, crushing valuations in tech stocks. Before we get to the specific companies in the danger zone, I have a quick favor. If you want to stay ahead of these market-moving events without reading thousands of pages of reports, hit that subscribe button. It helps us keep the lights on and the coffee brewing. Now let's look at a specific stock that is walking a tightrope this week. Sticking with the bearish trend, we need to talk about Palo Alto Networks, ticker PANW. They report earnings on Tuesday, February 17th. Cybersecurity is usually a great place to be, but Wall Street is getting nervous here. While the company is expected to grow earnings by nearly 15%, investors are looking at a specific metric called Next Generation Security Annual Recurring Revenue. That is a fancy way of saying, how much money are they making from their new stuff? That growth has slowed down for 6 quarters in a row. When you have a stock trading at over 10 times its sales, way higher than its competitors, you don't have room for error. If they miss that number or give weak guidance, we could see a sharp sell-off as investors rotate out of expensive tech and into safer assets. It's not all doom and gloom. There are clear pockets of strength if you know where to look. First up is Walmart, ticker WMT. They report on Thursday morning, and they are looking like the ultimate shield against this volatility. Walmart has been outperforming the S&P 500 for the last 2 years, because when prices go up, people shop where it's cheapest. Analysts expect their earnings to jump 9%. If the market gets scary on Friday, expect money to flood into Walmart as a defensive haven. We also have a major buy signal coming from the industrial sector. Indonesian President Prabowo Subianto is in Washington, D.C. this week to sign a massive trade deal. Here is the trade. The U.S. lowers tariffs on Indonesian goods. In exchange, Indonesia buys $15 billion worth of U.S. energy and 50 Boeing aircraft. This is the new era of managed trade, swapping market access for purchase orders. This is incredibly bullish for companies like Boeing, BA, and energy giants like ExxonMobil, XOM, securing long-term demand regardless of what the economy does. Finally, keep an eye on Japan. Their markets are open on Monday while the U.S. is closed for President's Day. They are expected to report that their economy grew by 0.4% in Q4, bouncing back from a contraction. A growing Japan is good for global stability. So how do we play this? Next week is backloaded. Monday is a holiday in the U.S., which means low liquidity and thin trading. Do not let the quiet start fool you. My prediction for the week centers on the Friday doubleheader. We have the PCE inflation data and the Supreme Court ruling hitting the wires on the same day. If the court kills the tariffs and inflation comes in cool, we rip higher. If the tariffs stay and inflation is hot, we flush lower. The smart money is using the quiet Monday to hedge their bets. Expect defensive sectors like staples to outperform high-growth tech until the dust settles on Friday afternoon. That is your coffee break. You are now smarter than the algorithm. This information was compiled from various sources across the internet and is not intended as financial advice.